Morning all. Sorry I'm late. Feel like a naughty school kid. Sorry I'm late. Let me think of an excuse. Morning Ladder, morning Andy, Asmat, Diamond, Themba. How we doing? Right, sorry, in a mess this morning. Right. Market's about to open. Haven't even got the Dow up. There we go. DAX even, we've got a gap. So I'm not going to play this morning. I'll talk about what I think is going to happen today. So in a bit, but I'm not going to try and trade this opening gap this morning because I want to see what the markets do at the open. Because this price action yesterday, as you can see, is very, very erratic. We had a very weird day yesterday put in. So the inflation figures in the US obviously did all this, but anyway. So. Right, sorry about that. Yeah, so basically, just to tell you why I'm a bit late this morning, we had somebody hit our car a while ago, back in April this was. And as you normally do when someone hits your car, you go to your insurance company and say, I've had an accident and it's not my fault. And then they sort it out for you. What's actually happened in this case is they gave us a hire car. And the other company, which is what was on my policy, and the other company that we're claiming against has basically turned around and said, well, you shouldn't have given them a hire car because they could afford to rent their own hire car. And they're arguing, basically. So I've now got to provide a breakdown of our monthly income and outgoings and all that sort of stuff because they don't believe that we should have been given a hire car. But anyway. So we've been trying to sort out how to work out what your income and expenditure is and all that sort of thing this morning based on what the hire car company probably want to see and all this sort of stuff. The insurance company rather, so bloody nightmare. Anyway. And I didn't realise what the time was. Oh yeah, I'm late. And so I have had a look at news and stuff this morning. There's a lot going on at the moment, obviously. So I'll start with a quick recap of yesterday. Massive day yesterday. 10%. That's totally abnormal, but you take it when you get it, basically, don't you? So I had the DAX on yesterday here. I took my trade was I put my trades on. If your insurance policy that you're paying for includes coverage for the car, what difference does it make what your income is? I know. The trouble is now, though, I don't know if this is a normal thing now. I had a massive head-on collision in my car about 3 years ago. Wrote off my car, lucky to be alive type collision, and the insurance company just sorted it. Didn't have to do anything. This time round, though, when you do a non-fault claim, what happens is they pass you to a third-party company, and this company is called Auxilis, and their job is to handle the claim on behalf of the insurance company. And what you have to do is you have to take out a loan, which is guaranteed by an insurance policy, in case the other company doesn't pay out. And then if they don't pay out, they pass it from your insurance company to Auxilis, this third-party company. Then they pass it to a solicitor to deal with the battle against the company. So this is a simple scrape that happened in a car park. Probably cost 400 quid to repair it. It's now, September? October. And this happened in April. And I'm having to possibly go to court over it, because the other company won't pay out because of some argument about a lease car that was included on my policy. It's just utterly bonkers. But anyway, it's not how I remember insurance being handled. Anyway, so yeah, yesterday, nutty day. This is obviously not norm. This was a lucky trade, but you get these trades every now and again where you just get a lucky one and you take it and it works. So I'm not going to where are we? 13th. So you can't apologize for having a lucky trade. This was just one of those trades that worked, and it's kind of a news trade, but I'll show you all the trades I did yesterday on, that's all the DAXs. So I basically got on yesterday here. So if we drop this down to M5, excuse me. So remember I said yesterday, be watching this area basically for a potential reversal. And I think somebody said in the Telegram group, is it a good place to get on, or is it wait until the news has happened? So I said, exactly the same as what I just did here. If you get in, one or two things is going to happen. If you get in ahead of the news, you're either going to get stopped out really quick and get slippage. And I've had slippage. Remember, I had that Swiss yen trade a few weeks ago where I got slipped $500 loss. This one basically has paid me back that slippage loss. So you're either going to get stopped out really quick, or it's going to go your way and you're going to make an absolute fortune. This was one of those. So basically we pushed up ahead of the news, and we put in this whacking great hammer. As you can see, as soon as we had that bear candle, I got in on that hammer. Shall I enlarge this so it's easier to see? Yeah, so I got in after that shooting star, rather, on that bearish candle. So we had a bearish engulfing after a reversal, kind of a mini 3-bar reversal, if you like. And then I put a pending order here, which was under the low of that candle. So the idea was either that's going to stop out above there, or it's going to go and we're going to start the reversal and I'm going to add to the position. I added to the position, obviously automatically. We went into an accumulation ahead of the news, and then I got out here, and obviously it went miles down to there. So just, one of those trades. You take it when you get it. Don't get them often. But that's how I think you should trade news, rather than what people do is they wait until 2 seconds before and they try and straddle it with a long and a short at the same time and hope that they don't get whipsawed out. Get into a position with what you think is going to happen. My instinct yesterday was US dollar going long, positive figures, which it did, which will drive indices down. So my trade was short indices because I was expecting US dollar pump. And that's exactly what we got. But, equally, this could have gone that way, and I would have not had those stops on it, and I've had my stops on it up there, and I'd have been sitting in a $400 loss, wouldn't I? So, swings and roundabouts. But then yesterday, I tried to add on. When the market opened yesterday, I tried to do an add down here, which I got stopped out on. And then we put in a new low. We had a reversal alert. So the market structure break happened there. And then we pushed up, basically. And I traded, where's my trades? Oh, sorry, I didn't trade this. I traded, then I switched over after that move. I switched over to the Dow here, as you can see. So I had a couple of losers on the Dow, which were sells. Yeah, so I put some sell orders in. I think I posted these in the Telegram group, didn't I? I said, this is the point of no return. When we got that bearish candle started there, and we started this drop, I was like, right, this is where we're probably going to turn, which is going to be that move, if we're going to. So I put short on, added onto that short, obviously stop above the high, then the reversal didn't happen. So I got stopped out on those positions. So I flipped long, which was that position, and that position. Yeah. So as soon as I saw that break above that high, I was like, right, we're coming back to this gap. So I put a long position on, added to the long position there. Sorry, that's not right, is it? I added here as we broke. So as soon as I stopped out, we got added. I added another one on that pullback and push, added another one there, and then I scaled out of those two at the close, and then one TP'd up there. So, and this is a really good example of what, I said this in the Telegram group yesterday. When you're scalping, and I said this yesterday, didn't I, in the live room as well. When you're scalping, you have a bias. You always have a bias when you start. You think, right, where do I think we're going to go at the open? Where do I think they're going to aim for? There or there? You'll have a bias long or short. If you're proven wrong on your bias a couple of times, like I was there, you have to turn around and go, right, okay, it doesn't look like they are going to pull back and drop this. They're going to go long. So you get back the money on the losses you had by flipping. And that's what I did. That's why yesterday was so good. So that was yesterday. Obviously, with that came the pound US dollar drawdown. So with the pound US dollar, I'm short. And I added an aggressive drawdown control position in here, which got stopped out. So that was there. Yeah, so we pushed up into this double top. So I tried an aggressive there, stopped out straight away on it, and then we went into an accumulation. I added another aggressive drawdown control position here as I saw this rejection starting. So I saw the rejection there, we pushed back up. So I added a short, and we're just sitting in that at the moment. And I've got another, this is what the EA took for me automatically. So obviously just adding on to the position as normal. And then I've got another aggressive position there. So what I'm looking for today is a break of the Asian low. Oh, I've just been got into it actually. Sorry. Yeah, there we go. So I'm in another one there. So I'm looking for this break of the low. If these aggressives don't work, stopping out. So the pound may go today. If the pound goes, I'm going to stop out on those two, and that'll be a little bit of loss. But I will use some of this to get rid of this if this pushes the wrong way today. So we'll see what happens. Oil got into yesterday. Actually, we didn't get into it yesterday. I got into it day before, wasn't it? So as we were dropping here, I took my first position, which was that one manually. I put the EA on. We pushed up and I had another manual position, which I put on, which got gathered up there. And then we had that massive drop on the news and it all completely recovered yesterday. And the EA got me into another position. So I've got these two kind of make up a normal size position. And that was my little starter. So we're hovering up here at the moment. I've got a break even on all this oil. I don't trust it. I don't trust any of those moves yesterday, which I'll talk about in a minute. But this was what I was looking for, the 38.50 for a shallow retracement if we're going to continue this leg. And obviously a deep pullback down to 61.8 or 72 area if it's going to be a deeper pullback. But obviously we are in that downtrend. So it's very difficult to tell what's going on. There is so many mixed messages out there at the moment. The markets are completely confused. A lot of people got wrong-sided on trend trades, on everything yesterday. So it's difficult to tell. So I'm just protecting this with a break-even stop. I'm very, very tempted actually to take it off because it's 0.5%. So I'm tempted to bank it, but it started pushing up this morning. So I decided not to, but we have just double topped. So I think what I'm going to do is stick a trailer on these. Let's just do 50. Might as well bank something on it if it's going to. So I'm just going to stick it under that reversal alert initially. And then if this thing flies this morning, fair play, I'll get dragged along with it. If it doesn't, I'm just going to get out of it for the minute and bank that. Pound Swiss is in profit. Odd CAD is also in profit. Odd CAD, I've got longs on. So I'm looking for this area of resistance to get retested on a long. So basically we've pushed down, we're in an accumulation at the moment. We took all the liquidity of the lows out yesterday and then pushed back up above the highs. So this is, if this is the few wick-offs out there, if this is the wick-off spring, this is the accumulation before the break. So either that's going to happen or it's not. I don't know. But again, I'm really undecided. The Canadian dollar obviously moves quite a lot with the US, and I'm wanting the US to push, which means that Canadian dollar will push. So not sure on this one either at the moment. Again, I'm toying with the idea of just banking these just to move them over there, because I think we're going to get some volatility at some point today. Somebody's going to say something and it's all going to start unraveling. But yeah, that's the main problem at the moment. I got a Euro Swiss and a Pound Swiss on yesterday. The EA is obviously set up. Come on. So the EA is all set up. So Euro Swiss, obviously to take shorts in line with the trend. Yeah, so this is trend trade short, and same with the Pound Swiss is a trend trade short. But obviously these are just up at the 72 now. So this is kind of where I want to see this move start. If this move doesn't start from here, might be a bit worried. Which brings me nicely onto the pound. So obviously this is in a mess at the minute. News-wise, yesterday, we had the rumour mills at work. This is what's happened this morning. Quasi is coming back early as the UK plans a U-turn on tax. So obviously all these moves that we had yesterday from the pound was based on a rumour, and you know the old buy the rumour, sell the news saying. It was based on a rumour that they were going to completely reverse the budget. So somebody within Parliament said to some reporter somewhere that that's what they were going to do. Then they interviewed Quasi, and I was watching it live, the interview, and he said, no, I'm coming back from this meeting and I'm going to prepare the 31st fiscal statement. We are sticking 100% by what we said. So as far as Quasi is concerned, it's the opposite. So we had this massive spike and then confusion in the market. And the market at the moment is just left in limbo at the minute, thinking, what on earth is happening? So we could, when he gets back today, have some announcement on this U-turn, which he said he's not going to. Yesterday he said, point blank, I'm not doing it. Liz Truss, on the other hand, is sitting there with guns pointed at the back of her head with her government wanting to kick her out after 5 weeks, needing to do this. So, and obviously you've got the Bank of England pulling that direction, Bailey, and then you've got the government pulling that direction. We're stuck in the middle here, not having a clue whether we should be bullish or bearish on the pound at the moment. And it seems to change pretty much every 6 to 12 hours at the moment, doesn't it? So I get the feeling today we're going to have some kind of announcement coming out of the UK, which is going to affect that quite substantially, one way or the other. We had lots of news coming out of the yen last night. There's a load of tension again going on. The world seems like everybody's like in the school playground at the moment, flexing their muscles. We've got North Korea flying jets over the South Korean borders. South Korea scrambling jets to go and push North Korea back. We've got North Korea firing missiles over Japan, and Japan turning around and saying, if you don't stop this provocation, we're going to get cross with you. The whole world at the moment seems like there's just a load of world leaders poking each other, going, in a minute, I'm going to punch you. And somebody is going to punch someone soon. I just get this feeling something's coming and it's not going to be good. But there's tensions flaring up all over China, Taiwan, Korea, Japan. We've obviously got the Russia thing. The US is obviously usually poking everybody, not necessarily on purpose, but because they get involved in everything, because they are involved in everything. So increasing interest rates is wrong coming out of Japan, whereas the rest of the world is increasing it because it's the right thing to do to get on top of inflation. They're saying nah, and obviously the yen wasn't particularly impressed with that again last night. More weakness in the yen. So it literally is a case of, at the moment, it really doesn't matter what your bias is on anything. You are literally at the talking heads will at the minute. They will just decide what happens. There's nothing we can do. Doesn't matter what you read into this news yesterday. Yeah, it was positive. We got that lovely move. So the US dollar started to move. The indices started to come down. Everyone's like, yep, perfect. That's exactly what we would expect to happen. Everybody piled in long because it was also part of the trend. And what did they do? Reverse the entire thing the other way. So the US, these moves that we had yesterday were just like, that is exactly what should have happened. An accumulation and possibly a pullback and then a push. 100%. All they did was that. No idea. The same with the pound. We had that huge move to the downside, which is exactly what we should have had. And then it went mental that way because of a rumour. And now it's coming back down again today. So I'm fully expecting us to be back down to origin today, and then the market go, right, What's your next move, Quasi? You know, it's a mess, isn't it? Everything's in a mess. So my aim today is literally to try and get as flat as possible, because I have no idea, honestly, and I don't think anybody has. They were interviewing yesterday on the news the head of strategy for CMC Markets. Obviously, you are a broker, CMC. But they are also an investment house, the same as IG. You know, everybody knows IG is a broker, but they're not a massive investment firm. CMC were sitting there basically scratching their heads, the same as everybody else, being asked the questions, you know, let's, as the news asked the financial experts, one of the big investment players, what's going on. And he basically didn't have a clue. Nobody's got a clue at the moment. He basically said, we are riding, in a nutshell, he said, we are riding the waves with everybody else. We got caught the wrong side yesterday of things that we were assured were going to happen. Yeah. Obviously, the investment, when you've got people investing, you know, it's not, you got to be open-eyed about this sort of stuff. These people working in central governments, they know stuff that we don't know, and they will make money out of stuff because they know things are coming. And when they are investing with houses like CMC and they don't know what's going on, no one's got a chance, have they? So the idea today is to calm the markets. That's what Quasi's remit is, and Bailey is obviously pulling all of his bond purchase support today. So the pension funds are all stuffed at the moment, and not sure what's going to happen. So basically, the next 8 hours, the government and the Bank of England have got to calm the markets and pick a direction. And it has to happen today because the support is being removed by the Bank of England today. So if I can get back down to sort of a break-even level on this, which looks like it's probably going to happen while I'm on stream at the moment, which is how volatile this thing is, I'm getting out because I just want to be flat at the minute. I have no idea what's going to happen. You don't know what's going to happen this weekend, and the markets on Monday could open with all sorts of weird and wonderful gaps all over the place. So I just want to be as flat as I can until we've got some directional bias on the pound. The US, obviously, the Fed said nothing on Wednesday to either ease fears or ramp up fears. So we got no movement off of FOMC. We had the expected rise with CPI, which meant the pump should happen, and it did. But then that all got completely reversed. So, you know, the market just doesn't know which way it's going. Today, we've got retail at 130, followed by the University of Michigan, which most of that movement is going to come off the retail figures. So I would expect them to spike one way or the other, or start a move one way or the other. I just haven't got a clue which way it's going to go today. And I don't think it makes any difference to what that figure is going to be at the moment. If it's positive retail sales figures, which should usually pump the US dollar, I think it'll probably collapse. Oil, another prime example yesterday. What confusion there is in this market at the moment. Oil came out as negative. We had a 9.9 million stock. We were expecting 0.9 million barrels in stock. We got a difference 0.9 stock. We got 9.9. What that typically does is send oil prices going through the roof. And we got a decent movement, obviously, off of oil yesterday. But that's been the story for such a long time, and you would expect now this thing to rally because it's all good. It means that the oil prices should be going up, etc. But that's what we've been having many times over the last over the last sort of 6 months or so, 3 months, 6 months, and it's just coming down. So yes, that was a lovely little rally yesterday. Do I have any faith in it being sustained at the moment? No, because I don't think the market, what's coming out of the market sentiment-wise, is having any impact whatsoever in the way that we expect it to. So long and short of it is, I want to be in and out of everything as fast as physically possible at the moment, just to get money in the bank and get out. Again, look, this is all positive. Look, Japanese inflation is likely to be lower. It's below 2% next year. Everybody else's target is 2%. and they're saying it's likely to be lower than that. And yet what's happening to the yen? It's going through the roof. They're not going to raise their interest rates. Everything's going through the roof against the yen because the yen is so weak on better than the rest of the world figures. It's all a complete mess. So if you come here for guidance, flip a coin. That's what I'm doing. But follow the trend. That's what I'm doing, basically. So your trend is your friend, obviously, which is what worries me so much about this oil trade. But not so much about the pound at the minute. So I'm monitoring this closely today. I've literally, if you take this 2.4% out of the equation with the pound, I'm flat anyway on everything. So this is my key focus this morning, and that's why I've got these two aggressive positions on. And as long as these aggressive positions remain intact and this Asian break that we've just had holds, I'll be out of this. I may even be out of this with profit this afternoon. We'll see. We'll see what happens. But everything today is going to be moving ahead of retail sales. And then obviously when retail sales kick in, it could all go completely the opposite direction. So ADRs yesterday, we had loads. I was looking at this yesterday morning, wasn't I, saying, isn't it weird we've only got one thing lit up on the ADR dashboard on the weekly? Look at it now. So yesterday was just blood in the water everywhere. Let's just see what's happening with the DAX this morning, the markets this morning, down. Yeah, so there's the gap fill done. Anybody take the gap this morning? I probably would have done if I wasn't so panicked doing other stuff. Didn't have time this morning. Couldn't concentrate. But down at the moment. So we'll have a look at all the ADRs and everything in a minute. I just want to look at the indices to start off with. So remember we had that big conversation yesterday about gap fills. And this was the one that I said we're looking to fill yesterday, which we did beautifully. So we came straight up, a very nice run up. I wasn't expecting it to run up so nicely yesterday, but we got there. Gap filled. And then the news happened, obviously. That's the other reason I was short on it as well. That liquidity run was very quick. There was a very fast pop out the top there. We got the gap fill done. We got everything done that we needed to. This was the other area that I was looking at for potentially sellers. I think I posted this in the Telegram group as well. This is where I was expecting to find some sellers, and I'll be looking to get in there. And then we started to obviously go a bit bearish. So I thought I'll try one ahead of the news, and obviously that worked out. So, but yesterday, all they did on the indices, this thing's coming down like a steam train this morning. Can't even get on it. If you're on it, you're on it. If you're not, good luck getting on. I'm not sure we're going to see a pullback on that today. Globex session is very much the same. So yeah, all they did yesterday was take all the liquidity. So from Wednesday and Thursday, sorry, no, that's Tuesday and Wednesday. So anybody that entered long Tuesday, Wednesday got taken out by the news. Anybody that entered short Tuesday, Wednesday got taken out pre-news. So they've cleared all liquidity out of the DAX in both directions, and they ran to the hills with it. So what would normally happen in this sort of scenario would be we would get a return to some kind of support and a bounce, meaning that we will be looking potentially at some kind of long position off the back of this. So we had this discussion, didn't we, about where we think it's going. And it's probably better to look at the US indices because I've got more data. And we have two types of pullback. We have a shallow pullback, which typically comes back to the 24, like that, and drops. And then we have a deep pullback, which pokes its head above the 72. So we have a shallow one, shallow one, shallow one, deep, shallow, shallow. What I'm expecting is potentially another shallow and a drop. After what happened yesterday, I think there is potential for us to be putting one of these in. The other reason being is we're just entering earnings season. So for the next 2 weeks, we've got lots and lots and lots of earnings reports coming out, which is going to typically what we get in earnings quarter is a rally, because companies are producing positive figures. People are buying stocks in companies that are performing. As long as they're performing, they buy more of those stocks. This is the first reporting quarter that we're going to have since inflation started to take hold and interest rate rises happened. So these sales are kind of on the cusp of when this all started to kick off. So these reports will be a good indication of what impact inflation and interest rates are having on companies and their borrowing. So there is a chance that we might have a lot of companies missing targets. As somebody pointed out yesterday, what typically happens when companies are expecting times to get harder is they lower targets, because if you lower your targets ahead of a period where you think it's not going to be quite as good and you still hit them, your shareholders are happy and that boosts your stock price. And their job, which is what the S&P typically monitors, is to show stockholders a good share price, which drives your stock price up. And this is why everybody invests in the S&P, because the S&P's job is to go up, because it's monitoring companies whose job is to provide profits for shareholders. At the moment, everything's going to pot, but even in times of going to pot, we get pullbacks, don't we? So it's very difficult to tell where we're going to go from here. I'm still massively bearish on it, and it's very difficult to get out of that bearish stance, because my expectation is a drop, which we've had, and I would expect another drop from here. But timings wise would indicate that we may get some bull pressure coming in. So very difficult to pick a direction on anything, which is, but if you're scalping, like I said, your job when you're scalping is to read price action. Yeah. So my job yesterday was to read price action after that massive spike. I read it wrong twice, and then I flipped because the market said go long. So I went long and the market took me long. You've got to change. So you just have to look at it on an intraday basis. But at the moment, from a long-term perspective, obviously we're at that point where we're going to change direction, I think. Especially after this candle. I think we'll get another potentially, well, I was going to say, I think we get another bull day today, but this is melting at the moment. So it's very, very hard. I'm not going to jump on that. Looks like after today you are taking the rest of the month off. Yeah. Morning shout. Yeah, yesterday was an outlier. When they talk about outliers, whenever you're doing back testing, this is really good actually point. Whenever you're doing back testing or building a strategy and you get that P&L at the end of the strategy test that says it made X and its drawdown was Y, that looks great, doesn't it? But what you find with a lot of systems and strategies, especially trend-based ones, is you have profit curves that look like this. Yeah, these are what we call outliers. Yeah, take those out of the equation and then look at your strategy, and what you'll find is that this yesterday was an outlier. Yeah, every now and again you get one. Also, every now and again I get one of those which is a minus, not 10%. I've never had a 10% down day, I don't think. But I've had 3 and 4s. So take me away. I'm agreeing with you, Lee. I think equity market's going to explore the upside for the rest of the month. Yeah, it's difficult to tell. We've got to be driven by price action. Obviously, when you're looking at a daily chart or a 4-hour chart, you're looking at the long term. So what's happening here has got nothing at all really to do with this chart whatsoever. Yeah, what happens? And oops, wrong one. To an extent, what happened yesterday has got nothing to do with today. Yesterday was a massive bull run. Today we're in a huge bear run. Nothing to do with yesterday. It has to do with yesterday and the fact that we need to look for areas potentially that we're going to find support and resistance, and previous times, obviously. But where price goes from the open is where price goes from the open. So looking at higher time frames isn't really relevant on the lower ones here, but long term it's very, very hard. So all these indices, we got levels hit yesterday. So remember when the live room yesterday morning we were looking at levels, and I said, we've hit the Nasdaq. We hit the Nasdaq the day before yesterday, so we had potential bounce opportunity there. We hadn't quite done the S&P. That hadn't got there. Now it has. And the Dow hadn't quite got there. Now it has. And the DAX had already... Oh, no, the DAX hadn't done... Oh, sorry, yeah, no, the DAX, we were looking at previous lows, weren't we? This one, which it had already done. So it's all, I think, now free to run up. But how far? If you have a typical, I'm trying to think, when was the last earnings quarter? So we're October, July, August, September. So it would have been July, wouldn't it? So there we go. So there's your last earnings quarter, earnings release. So your earnings releases were somewhere around here, beginning of July, August, September, October, yeah. So beginning of July, and obviously we had that market rally. Yeah. But then again, if you look at the previous one, which was April, yeah. So, it doesn't mean it's going up because we're getting earnings. Earnings is a two-way street. You same as trading. You have good days, you have bad days. Companies are going to find either they're better than expected results or worse than expected results, the same as any other time. It's just there's a lot more factors. This one, this is the big one. So if we have a quick look at the earnings, kicks off on Monday. The following week is the big one. So this is the big week where you've got a lot of big players in there, but they are spread. They're spread over multiple weeks. So. But it kind of starts next week with some big names in there. We got Tesla in there next week. We got Netflix in there. And then we go into that week, which is the big one. So this is where you got your Facebooks, your Amazons, your Apples, Gilead Sciences. I'm watching the 5th season of Handmaid's Tale at the moment. I just see that and go, Gilead? Ooh, wouldn't touch them with a barge pole. If you don't know what Handmaid's Tale is, then you won't know what Gilead is. But if you haven't watched it, watch it. It's a brilliant series. We've got CME, big players like Boeing and stuff. So this is all coming up, and we need to be aware of it if you're trading indices, because obviously that is going to have a big impact. Direction-wise, this obviously doesn't impact direction necessarily, but it impacts volatility. We're going to get a lot more volatility in the market, which is good. But it also means we quite often get a lot more whipsaws. Here comes our dating bot. So yeah, be aware of all of that. Obviously, it's coming up. He's on his way back from Washington. We're live in the UK before 11 a.m. UK time. So he'll be back at Parliament somewhere around 1-ish. So I suspect we'll get some news coming out this afternoon after retail sales. So I think we'll probably get retail sales out of the way first, and then we'll have Quasi speaking. Banks are reporting earnings today. They normally do well when interest rates are going higher. Yeah, I'm not sure whether that's going to impact. Yeah, I suppose. Yeah, it will impact the markets. I'm not sure what impact the banks have. I never pay any attention to bank earnings, whether they actually have an impact on specific indexes or what. But ADRs, there's nothing today. Let's go through the FX side of things. If you've got any questions on any of that, let me know. If there's anything specific you want to look at as well, obviously let me know. It's Friday today, so anything that's hit the weeklies, I would normally say, because it all hit yesterday, I would normally say this is point of exhaustion. We're likely to get a reversal today or a pullback. So that still stands true on all these weeklies, but obviously be very careful with anything that you're looking at in that section with the pound. And US, not so much. I think US is just, we're kind of back to where we were yesterday, aren't we, on the US stuff? With a lot of this, we've kind of had the return to origin on it. So, things like the US dollar CAD. I mean, it's a nuts move, isn't it? It's just a nuts move. Where did we get down to yesterday? Down to there. So we double bottomed, and we've supported that this morning, and now we're pushing back up again. So, anybody that entered short off the back of this, their stop is up there. Anybody that entered long on the spike, they're probably gone now, aren't they? So kind of does free up a move to the upside, doesn't it, with the US? But yeah, I mean, obviously things that have hit the US dollar CAD, they've only hit the weekly range because of yesterday. So, normally what we're looking at with weekly ranges, normal price action, something's managed to get more extended than normal, which means we will typically get at that pullback starting. And that's what we're looking for, the reversal or the pullback. With stuff that's hit here, if you're seeing it, the entire weekly range done in a day, as we saw yesterday, there's not really an opportunity there. So, use your head when you're looking at all of these. RSIs, obviously, we got some nutty RSIs as well. So I don't know if I've got a feeling some people might be short on the yen stuff at the moment. Obviously, yesterday with the yen, this stuff that's just coming out of Japan all the time, the same old coming out of Japan all the time, and the figures that we got yesterday about inflation and stuff, it should be good for the yen. We're just not seeing it. The market has got no faith whatsoever in the yen at the moment. So again, massive extension 4 hour on this. This is, we very rarely get to this 90 level. 90.10 is a couple of times a year, maybe, if you're lucky. We're embedded above 80 here, and we have been now for days. So this thing is very, very extended, but you've got to remember we had this massive whipsaw. When you talk about profit takes, this thing could have just cleared the decks completely, and now we're off on the next leg. So where you would normally get a push, accumulation push, we did the lot yesterday in one candle. So difficult. But yeah, very, very extended. More likely to come down than go up. But at the moment with the Bank of Japan, it's complete nonsense, and it's weakening continuously. So you can take them if you want. I'm just steering clear of them at the minute because I've really got no clue. I would only be hitting the short button because when they do intervene, we know we're going to get that sort of movement. Yeah, when the intervention comes, we're going to get, sorry, it was there, wasn't it? We're going to get the spike. So if you're on the yen short and you're 4 or 5 positions in, when that spike comes, happy days. There's a big profitable trade. But timing of those spikes, as we know, timing of the yen movement is impossible because they just won't say anything positive at the minute. So New Zealand dollar yen is also extended. We've got a nice double top potential coming up on this one as well. But again, look at the movement off of the yen yesterday. Everything moves on US figures, and it's all a continuation. It was literally just a spike, V-shaped recovery, and business as usual. But the moves we got out, the momentum off the back of that reversal was way bigger than pretty much everybody in the market was expecting, I think. So oil I've just stopped out on. It's going to do it again, isn't it? It's going to do it again. Last time this happened to me, you remember? Who's still in oil? If you're still in oil, don't get out. Remember what happened last time? I got stopped out of oil. Where was it? Can't remember where it was. It was here, wasn't it? This was last week, wasn't it? Was it last Friday? I think it was. It was last Friday. Oh, history repeating itself, look. Last Friday, I had a long position on, right? a fairly decent one, wasn't it? I was out here on this spike. So I got out on here with a trailer because I was happy with it, and then went, whoa, look at that. I was like, oh my God. I think some of you were still on it. I've just got out, right? So let that be a lesson to you. Look at that. This is why you take reversal alerts, closed candles. But, you know, you know my reasons for getting out of this at the minute. I need to just want to be a little bit flat. You're still holding, ladder. Yeah, hold it. Hold it. Hold the door. Hate you. I hate oil. In a positive way. I hate it. I made so much money out of it in the last quarter. I hate it. Because it does things like this. It's just, this is the problem with volatile stuff like gold and oil. It's just, it moves so fast and so hard, and it's just lovely. But when you see these moves, my FX brain is saying, after a move like this, you needed to get out. You need to take that money, because that's what normally happens. With FX, normally you're right, because normally you get that. But with this thing, it's just not, just moves different. I'm not used to it yet. Anyway. So yes, a bit in the bank this morning, 0.5%, 0.6%. I'm using the Lee contra indicator. Yeah, it's a good indicator. You're not. Do you know what, Lenny? You're not the first person to say that, and you won't be the last. There was someone in here in the live rooms a while ago that was following me, and his strategy was to watch the live rooms and basically wait until I had 4 positions on something, and then he would get in, because most of the time I'm wrong 3 or 4 times before I get it right. And he thought, well, I'll just wait until he's in wrong, and then I'll get in with 1-shot kills, and he did. It's great. So yeah, do your own thing. Use me how you will. But yeah. So New Zealand dollar yen extended as well. I'm not going to go through all the pairs today, by the way. I'm just going to go through the dashboards, because it's all going to change again today. It's all going to change again today, based on the pound. The pound and the US dollar have the power to move everything. And we've got retail sales, and we've got Quasi coming back and saying something later on. So there's no point in doing any real analysis, because it's all going to change. Follow the trends, find support and resistance, find extensions, same as normal, but be aware, obviously, you're either going to be in and out fast or potentially in a squeeze, depending on what it says. The whole fundamentals on the pound could change this afternoon. They just got to be aware. So yeah, New Zealand dollar yen extended, pound yen extended. So I like all pounds. I still like all the pounds short right now. I've got £2 on short. My exposure on the pound is double short. So I like it short. Pound yen, nice extension, 4 hour. We're above the 75. It's just tipping over, starting to tip over at the moment. Again, this is completely abnormal. All this is abnormal price action. Based on what's been going on with the market volatility. We are back to the highs. Every time we get up to this area, we're off. So unless something happens and for some reason Quasi's magically found something that's going to solve the financial problems in the UK, we are still short bias. And this is a good spot to start selling. So if you want to get into yen, that is obviously. The other ones that extended is pound Swiss. I'm in this one from yesterday. So I took first entry on this. I took first and second entry on this yesterday. So I'm in up there, and I'm in with my first position was there. My second position was there. What's that sell there? £8.83. Pound US dollar. That's weird. Look, that's a pound US dollar trade. just happens to be obviously at the same prices as the pound Swiss, roughly in the same area. How weird. Anyway, so yeah, pound Swiss in 2 positions at the moment. Obviously 4 hour, we're in a massive downtrend. We're back up at the 72 area. So, you know, if this is going to be new market structure to the upside, that's fine. I'm getting out down here before the next leg up. If not, we're potentially business as usual down to the downside. So I'm in this one. We're very nicely extended yesterday on the pound Swiss on the 4 hour up to there. The other pound is pound CAD. Again, 4 hour extension. Very nice level. At least we should be looking at a decent pullback, and I would suspect back to these highs. So look at this on a lower time frame. Yeah, so we've got these highs here. So if you drop down, that's where you'll be targeting. Somewhere down there. We have got, obviously, areas where we've had strong buying yesterday, but I would suspect the profit take is going to be more powerful. I think the market's going to want to get all this undone by the time Quasi gets back, because we don't know what he's going to say. So can I look at odd CAD? Yeah. So that's all the pounds done. Odd CAD's not on the radar at the moment. So I've got an odd CAD long on at the moment. I looked at this one. I think you were a bit late, well, maybe this morning, but I looked at this one this morning when I first came on. So we've just taken out those lows. We've got the range high here. This is a bit of an anomaly out the top of the range high, but we took all the liquidity yesterday from every long position. That was already taken by that and that. And now we're resting back up at the range highs in an accumulation, which typically will be a break to the upside. If we are going to start new market structure, we're on what? Day 1, 2, 3, day 4 of the accumulation now. So I've got 2 positions on it, and target is this area of support resistance, which is ADR. So that's my target on it. But I'm going to be watching everything very closely today. If I see, I have my P&L running on another monitor. Actually, I have it running on my tablet next to me all the time. So I'm watching this. If I see this dribbling away and getting close to break even, I'll be on it, and I'll probably shut it, because I don't have any faith in anything at the minute, unfortunately. Not anybody, nobody does, because you know everything's in a mess. So what I'm worried about with a pair like this is a continuation drop. This is a counter trend trade, so this is especially more worrying because this is counter trend. It was very extended and got embedded down here. So we had divergence. We were making new lows, and RSI was pushing up, so we knew there was strength there. But it's counter trend. Yeah, we're in a massive downtrend on this thing. So what I don't want to get caught in is this being accumulation, or it's a wrong way flag, isn't it? But what I don't want to be caught in is another leg down on it, because it's counter trend. So in fact, what I'm going to do right now is break even, stop it. I don't have to worry about it, because if I'm wrong on it, if we're going to break back down to these lows again, I'm not convinced we'll necessarily get out, because if we stayed in an accumulation like this for 3 or 4 days more, 24 is going to start coming down and putting pressure on the sell side. So, but that's my target. But you've got this propulsion gap here as well on the 4 hour, which we've already tested once, which we're just coming up to as well. So you've also got a double top resistance potentially on the way here. Before you get back up into there. So, we're coming here now. So you look at this 87, pretty much 87, big round number, isn't it? There's 87. That's where we tapped into at the top of the Asian range this morning. So if if we can get through that second knock on the door, we'll quite possibly pop through this, and then I would look for that sort of movement. But thanks, Diamond. UK's PM. Why didn't that pop up? My pop-up alerts aren't working this morning for some reason. UK's PM Truss and Chancellor Kwarteng are weighing up whether to announce important tax rise today after Chancellor's early fight back from the US. Early flight back from the US. See, this is the problem at the minute. You just don't know when it's going to go. This market is so jittery. That was when that news was announced. Look, there, immediately we get that little pop. I'm just seeing where the break even is on these two positions. 65, so it's 30. It's really close. So I'm just calculating basically the break-even stop between these two aggressive drawdown control positions, which is here. So at the moment on these two positions, I can close both of them there, and just that's it. I'm just out of them. No loss, no gain. Because what I don't want is to go. Ideally, I don't want to go into drawdown and stop these out. If this isn't going to go today, I was expecting this to go before, but now she's just announced that. Obviously, the market's a little bit happy. Because this is all bullish, basically. But it's not, you know, again, I keep coming back to this. It's still not getting us out of this. Everything they're putting into place is still not getting us out of this problem. Yeah, we are not as powerful as the US. We are in as much, if not more, trouble than the US. So therefore, you will get these spikes and these retracements, but overall, we're not expecting to be stronger than the US dollar. So I'm obviously in a position now where, because of this mess that they caused, I got into way too many positions and got into profit on them without profit taking on them. And that's why I'm in the position that I'm in, because I'm trying to get myself out of the position that they got me into. If you see what I mean, that doesn't make much sense, does it? But yeah, so do I want to close those? So close to break even on it. Just going to reduce the risk down slightly on these. So virtually break even on that one, and I'll take a loss on that one. If we break this, if we get a reversal alert here, likelihood is we're probably going to come back and retouch these Asian levels. I don't want that. So I'd rather be out than stopped out up here, if you see what I mean. So this is around about 3% loss. This is going to be something like 0.8, 1. So I don't want to take a full loss on it. So, and Swiss is pumped as well. But again, knee-jerk reaction. Quite often, knee-jerk reaction. And then, right, okay, don't worry about it. Don't worry about it until later. You know, don't worry about it. This is what it says. Are weighing up. So it's not even confirmed whether or not they're going to announce something today. Could be Monday. Could be this afternoon. Yeah, so it's all like you buying the rumor. Yeah, and then all of a sudden it's like, actually, not sure. So we'll see on that one. So going back to the RSIs, pounds obviously all extended. I've covered those ones. Euro yen is also extended. Again, this is another really nice short spot. So we've got these levels on the euro yen coming up. This is a lovely resistance. So we got up to this area before, rejected it multiple times. We kept knocking on the door, and then we finally broke through it, and the market rejected that level. Yeah, so this is pushing, accumulation, price discovery, not interested. Okay, let's go back down again. Again, come up to here. Nope, we're not interested. Come back up to here again. Nope, we're not interested. So we could see the same price action playing out here. Pull back at least down into this level to come back again and have a run up to try and do price discovery to the upside. So good potential opportunity for a euro yen short. Obviously, you've got additions up to there. So what are we, 146? So that's 150 ADR, 150 pips, so just over an ADR. So if you're getting in one here, you've probably just had a reverse alert this morning on this one. Literally just had it. So if you just got in on that one there, obviously, if you're going in half an ADR apart, you'll have one at roughly ADR and then another one somewhere up there potentially before a pullback. Or this one's just going to work and bring you back into this propulsion gap here. That's the one that broke the highs. That's the propulsion gap, which is 100 points to the downside. It's an ADR. Not an ADR. It's 3/4 an ADR. So nice potential short there on euro yen right now. I've got one on the euro short at the minute, and I'm not interested in the yen, so personally, but I like it. Just scared. I'm scared. I'm not saying I don't mind admitting it. Scared in the markets at the minute. It's a very, very, very volatile time. You know, you look at what I did yesterday. That can happen in the reverse as well. Yeah. So, you know, it's a very worrying time. There's a lot of that's another thing actually, just to diversify so slightly. I said the other day I was watching the Bloomberg channel at the market wrap, which is 9 o'clock in New York. They do the market wrap show, and there was another guy they were interviewing on there as well, who was who worked for a hedge fund, and hedge funds will often go anything up to 25% drawdown on their portfolios, and it's all factored in because you know they know what they're doing. You know, 25% drawdown on something when you're dollar averaging in is not really too much of an issue. It's when you get things like this. And he was saying, you know, we work within normal parameters. So we factor in the fact that we will get a movement like that before this happens. Normally, we will get a short squeeze like that before a retracement happens. He said basically they were watching themselves. Any of the funds that were up to their 25% limit there when that happened were watching their screens turn red with absolutely nothing they can do about it. And a lot of the pension funds were looking at exactly the same thing. They were watching their 25 trillion pension fund that had gilt investments in the pound. 15 trillion. Yeah. And it's like, nothing they can do about it. So, you know, when I say I'm unsure at the moment and worried about it, imagine what happens when you're managing a $10 billion hedge pension fund for a large corporate, and that happens. Yeah, this is why this happens, because the market has to buy this stuff back. They have to get this back. It's not an option. So. You know, it was interesting just watching things. You know, you see them with their screens up. They got screens of charts everywhere. Their charts don't look like this. There's no indicators and stuff. It's just a line. It's a line chart they use, usually with a color fill on it. So it's all colored in down here. You know, it's all black at the top, so they can easily see where they are. And it's interesting watching these dips, and the board's all lit up red. And you know, they showed a screenshot. An image of one of the trading floors, and it was like back in the 90s, absolute panic everywhere, people panicking because it's like, why is it happening? what's happening and what can we do about it? Nothing. Just watching your money flitter away. But anyway, just always interesting. It's worth watching that Bloomberg show. It's really good. Euro yen, Euro Swiss is also very nicely extended. I got into this one yesterday, first position and second position. I think I covered this one already, haven't I? So we were very nicely extended on the 4 hour. Lovely M pattern on the RSI as we did that. Again, M pattern, you can't see it on the 4 hour chart. Can't really see it on the 15-minute. That was an overnighter. Look at that volatility slip on the euro. Don't see that often on the euro. That's a biggie. So yeah, got into one position on that one yesterday, which was gathered up on that spike on the news, and then we've flurried up to the highs, got into a second position up there, and obviously break even at the moment on that one. So it's nice looking. Again, lovely downtrend. If you look at this going out, you know, this is obviously a lovely short Euro Swiss. We're in a pullback at the minute on the euro. I'm putting in a multi-week M pattern formation. No divergence on it at the minute, so it's just normal trading. But yeah, expecting this to be area of resistance. We haven't got to it yet, so nice to see. So we've got market structure break, reversal alert there, push down, pull up. This is the retest of the reversal alert, making that lower high. So I would expect to put in a lower low down in that propulsion gap, which is also a retest of that reversal alert. So we could go from there, couldn't we? So market structure could do that. Don't know. Nobody knows which way it's going, do we? We just need to pick one. So Euro Swiss looks good. Already in that one. CAD Yen's the other extension on the 4 hour. Oil driving up and helping the CAD. US dollar helping the CAD. So again, until the yen steps in, I wouldn't really want to short this at the moment, but I would want to short it when the yen does step in. So this isn't my favorite, as I've said. If you're going to short a yen, euro, pound, or New Zealand or Aussie would be much better than the CAD or the US dollar at the minute, because they're probably going to strengthen a little bit more. So, but we have got that accumulation. We're just broken up. So the long entry was here. And that's worked out very nicely. But then obviously that was on, the long entry was triggered on the Bank of Japan intervention. So we like, if you took a long there, you're very brave, because the Bank of Japan just intervened. So you're probably not going to do that, are you? Morning, Steve. Happy Friday. You're late. I was late this morning. I didn't get on until 8 o'clock, so I can't talk. Euro Swiss, CAD Yen, Aussie New Zealand. Aussie New Zealand, I'm in long as well. This is just dribbling, really, at the minute. It's all I can describe this as. It's not. It's just dribbling. Look at these wicks. Look, wick, 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 wick. Inside bar, wick, wick, wick. It's just no idea where it's going, is it, at the minute? Morning, Jane. Thank Crunchy, it's Friday, yes. I've had a Crunchy for a long time. So yeah, we're extended and embedded at the moment. So yeah, like it. I'm already long. I've got one on there, second position down here. Average is there, you know, just waiting for some kind of strength on the Aussie or a little bit of New Zealand dollar weakness, either or. But love it. Trend is obviously big up, and we're just putting in a 72 bounce, which we do on a regular basis. A little bit deeper than normal. This depth that we had there, we're getting at the moment. Our adult site is back. I don't know why I keep bothering to do that, to be honest. They only post about 5 times. Aussie New Zealand stopped you out overnight. Oh dear. Yeah, there's always Tinder Hot. It's switched, isn't it? We're on Tinder Hot now. We're on another domain. They obviously got shut down, the other domain, whichever one it was, chat, whatever, XYZ. They obviously got closed down. Got stopped out overnight. Yeah, it's still going. So I like it. Still like it as a long. So that's nicely extended as well to the downside. So was more extended. Obviously, we were here yesterday. So good opportunity. Hourlies flat on the 21s, the 14s flat as well. So again, these ones, you know, when I cover these RSIs, the 14 and the 21 hourly RSIs in the mornings, quite often they are going to be flat because these will be triggering intraday. So obviously when we come on in the mornings, we've had the Asian session and it's all a little bit quiet, but you know, you're going to get these triggers on the hourlies throughout the day. So keep an eye on if you've got the RSI dashboards, you know, if you want to configure them for the 21 RSI and the 14 RSI. This is obviously your aggressive entry RSI, and this is your more conservative entry. You know, just watch during the day for opportunities in line with the current daily trends, and jump in as and when you get them, really. But so that's all I've got really today. Obviously, all of these pounds that are extended, we're hanging on tenterhooks, waiting for quasi and Liz Truss today. That spike doesn't look like they're particularly interested in that, does it? Which is good. Slightly worrying though. You see, the market is just so jittery. It's so unbelievably jittery. You get the news come out that there may be something possibly happening a bit later. We think, we're not sure, or confirmed on the source. Boom. There's too many people with their fingers on the buttons to hit them at the minute, and the movements are erratic. So, but a day like that in reverse today would be spectacular. In fact, I'm going to set TPs up on these aggressives just to make sure I get them in the bank. So there's 2.6% profit there. And then I will have a look at it and see what's happening. But obviously we've got actually, retail sales is 130, isn't it? How far away are we? We're 9, 10, 11, 12, well, 4.5 hours. Yeah, I mean, there's every possibility that could get hit by the time the news comes out. So what I might do, I might pop my TPs down here for all of these positions. And if we are around about break even, when we get towards that 130 point, I will put trailers on them and wait and see what happens, and see if I can catch, you know, a positive US retail figure and get another big day today. You know, we'll see what happens, but I'm not going to cap my upside at the moment in this market because, you know, as you saw with the DAX yesterday, you take advantage of one of those and it can make you month. Don't forget, my target monthly for position trading is 8 to 15% is a normal month. I'm 14th of the month, I'm on 22%. 10% of that was made scalping one move. Actually, well, yeah, in and out one move, multiple positions, obviously, but you know, so your profit, although we say, you know, bank every day, like I've just done with oil this morning, just keep putting those percentages in the bank. You're going to get days where it's going to make you month, and those are the ones that make you months, make you quarters. You just got to be in the market, otherwise you can't get on them. I'm just reading the Telegram group. Oh, sorry, I didn't see you guys hollering at me in the group. Yeah, sorry, I wasn't here, was I? The man has a normal life with wife and kids, I guess, as well. Yes, that's exactly right, Paul. That's exactly why I wasn't there this morning. I was having a big conversation with my wife about the insurance on the car. Not an argument. It was a moan because we've got to fill out some forms for a claim, which I covered this morning. So go and watch the replay if you want to know about that. It's really not interesting. Don't bother. Right, anybody got any other pairs they want to look at specifically? I think I've covered most of them because obviously we got extensions on quite a few pairs this morning. I'm not looking to get in anything else at the moment. The EA is running obviously for me on all of these instruments. So the EA is just going to get me into positions in line with trend at the moment, which it's doing. And it's obviously got me into the pound Swiss and the euro Swiss yesterday. So I'm just going to rely on those entries at the moment. And obviously on the 4 hours, if we get anything extended on the 4 hour in line with trend, I'm taking it anyway because it'll be extended on the hourly. By the time it gets to the 4 hour extension, the hourly extension's already happened. So I will already be looking to get in if I'm not already in. So plan today is really just to babysit this aggressive drawdown control position on the pound Swiss. I'm going to Aussie CAD. I'm either going to get more profit on it or I'm going to break even. And these three are just running as normal. And that's me done at the moment. I'm not looking to do anything else. DAX, we've stalled out after the initial move, but like it short, really like it short, actually. So target-wise on this today, it's virtually impossible because this is all one flourishing move. So you could kind of pick that, which is where we pushed up to, and that's where the news happened. We came up above it, retested it, and then pushed up. So you could use that as a target. Other than that, no idea. So if you're looking at downside on this today, you're looking at 123.61, which is kind of bottom of that propulsion gap. There's not a massive amount of room in there, is there? But that's a lovely accumulation drop this morning. So this propulsion gap, if we're trading up into here, this is where I'd look. If we're going to get a short continuation today, this is where I'll be looking for a short continuation. And kind of even now. But wait for some bearish price action. We've got no bearish price action in there at the minute. If you look at the price action, candle by candle, push down, we pushed up, we pushed up. That's an inside bar, bullish candle. We had a long wick rejection of these highs, followed by a bearish candle, which didn't break that low. So you got a control candle there. Inside bar, inside bar, inside bar, push up. So now we're looking at basically a new low, lower high, and a lower low. So if this candle closes as bearish engulfing, this is really your first indication that the sellers might be taking control today. So they sold, yeah, continue to sell. We come up, the sellers that caused this move are adding to their position here, which is what we're going to see if this candle closes as bearish engulfing in the next minute. Let's just watch it. 1 minute to go. So that would be your first signal for a short. May or may not work, but that is the only signs of selling so far. Since we stopped this move, all we've done really, if you think about it, let's go sideways. There's no real indication of any kind of short. And obviously at the moment, we might have made a new lower high and lower low. But if this candle closes like that, the bulls are in control, aren't they? So still no signal. And after the day yesterday, obviously this huge bull day yesterday, you know, the market is obviously bullish at the moment. All we've done is filled the gap, and that's another reason to go long. The gap feels complete. So Okay, so you've got bearish engulfing. So there's a short opportunity there. So I'm only going to take small positions today. I don't trust it. 400 sell stop last. So until we break that low, I'm not interested. If we break that low though, obviously that high shouldn't hold. We should be off down to target, which is here. It's just 2 to 1. And obviously adding on this, I would probably add on that low. If we get there, but that's I'm very tentative on the DAX today on all these because I've come into today with no real directional bias whatsoever. Gap fills, if I had been watching the market this morning, to be honest, I probably would have taken that. As soon as I saw this accumulation drop, I probably would have got in on that short, which is annoying because it would have been a lovely gap fill trade. Would have been a good 1%, 2% profit probably, but wasn't watching it. Life takes over. So triggered short. Okay. So I was just reading something on another screen. I am here. The other thing to be mindful at the moment with this DAX especially is if we make a new lower low here and we do close negative today, we are setting up for contraction, symmetrical triangle. So we should be looking for at some point an explosive move, and obviously next week we've got the earnings starting. So once that explosive move starts, typically you have a kind of a trend, and this is why the earnings is so good, because when you get those earnings reports coming out, as you had here, well, this isn't really here. When you get these earnings reports coming out, you know it's sector by sector. If, for example, Microsoft is doing well, Tesla does well, and some semiconductor does well, the tech sector will do well. So you'll find the NASDAQ will have way more up days, as you can see here. You'll have way more up days. So you've always got a bullish bias when you see earnings reports coming out and the earnings are doing well. If one company's doing well, typically they all will. If you get the earnings start off as poor, you tend to get them all being poor, which is when we see the opposite happening. Which is when we get the earnings which look the opposite way. So you get the earnings that come out like that. Everybody's doing bad, sort of thing. So when you get contraction ahead of earnings, the market's obviously not going to want to put a fortune into long-term positions ahead of earnings, because they want to see what the earnings are and then they will enter their long-term positions. So it wouldn't surprise me either that we see a reversal of yesterday's move and some kind of contraction. But with what's going on at the minute, it's Putin opens his mouth and this thing's going to go that way or that way, isn't it? Just impossible really to tell day by day. Okay, so we've got the lower low, lower high, lower low, lower high, lower low. Potential wick test of that wick so that we don't get a propulsion gap. And then we need to challenge that low. Okay, so we'll see what we do when we touch this low. I was just reading Steve's comment. Still on the upside, there's always Tinder Hot. I bet you've got Tinder Hot open on another screen now, haven't you? I'd be very careful of putting your any kind of details into a website like that. If they're spamming YouTube comments as their marketing strategy, I can't imagine they're not run by Russian gangsters who are trying to scam you. My son got scammed yesterday. He plays Roblox. Don't know if any of you got kids that play Roblox. But he got scammed. There's a lot of NFTs on there. It's like you can dress your character up in clothes and you can buy things for your character and all that sort of stuff. And there's a trading system on Roblox that you can basically trade gear that you've got that you don't want with other people. And there's a whole industry sort of sprung up around trading. And he had a hat, basically, which was worth something like 45,000 Roblox, which equates in real money to about $400. So if you went out and bought 45,000 Robux, because it's their currency, it would cost you about $400 to buy it. And there's scammers out there that basically target people that have got expensive items, and they say they want to trade them. And the scam is basically within the system in Roblox, which is all monitored and policed. You can only trade 4 items at a time. So because some of these items are so expensive, these scammers say, these 4 items aren't going to cut it, are they? I'll give you 6 or I'll give you 8 items, but we can't do it through the platform. So come into the Discord channel and we'll find a middleman that you can choose, and he will hold everything until we've completed the transaction. And what's happened is basically somebody made friends with him a couple of weeks ago, and he's been having this friend on there that he's been playing games with, and he trusted. He was actually part of the scammer ring. So they ran off with $400 worth of his stuff. In real money, this is 45,000 Robux. So if you were to sell that item on the marketplace, it sells for 400 quid. Very sophisticated scams going on. But yeah, they're everywhere. Like getting in the Telegram group, don't we? Pretending to be me asking you for $100 in crypto for something. It's just this. They're absolutely everywhere. Basically, rule of thumb: if you don't know the person, don't trust him. Don't trust anybody, anywhere. But he's only 14, and obviously he's been working very, very hard to get that. And he's although it's not, it doesn't matter how much you say to a 14-year-old kid, it's only an electronic hat on a game. It's something he's been trying to get hold of for a long time, and basically some scuzzy scammers nicked it. And Roblox won't do anything about it because it's outside of their platform, obviously. But anyway, they're everywhere. Where did I go? Oh yeah, we were talking about Tinder Hot, weren't we? That's why I was talking about scammers. They'll be skimming your card and they'll be off gambling with it before you know it. We might be getting into an accumulation here. Don't seem to be going anywhere. Yes, exactly, ladder. That's what we said to him. Valuable lesson land there. And the worst thing is, and I think this is the thing that's really cutting him up, he knew it was a scam. He knew the scam. The scam is well known. He knew it. But the real, the real thing was this was somebody he's been playing with for 2 weeks, almost every day, communicating with within the game. It's all in the game. We've been playing silly games in Roblox with him for weeks. So it's grooming, basically. It's grooming for electronic digital currency. But it's weird. But yeah. Valuable lesson: don't trust anybody. Just trying to think of somebody I could trust. You can't trust anybody, can you? Everybody's out to scam you. This is why I think I love doing this job, because there's nobody I can get scammed by, and there's nobody working for me. I've got no customers. This is me. I'm in charge of myself, and the only person that's ever going to get scammed is me by me. Such a pain to see our kids learn what the world is actually like out there. Yeah. All of us on here. Yeah, don't trust me. Hey, look, this is I'm open and honest with everything I do. Yeah. Don't trust me, because 90% of the time I get it wrong. But at least I teach you how to correct the problem. This is the issue, isn't it? Everybody gets it wrong, me included. It's just I've come up with a way to correct the problem when I get it wrong. If I could get it right every time, and this is what all the scammers are after, isn't it? Everybody selling all the EAs, they've built this beautiful EA that works over one period of time with one setting, and as soon as you put it on a different chart or a different instrument. But I've learned that I've bought so many EAs in the past and been burnt by them, and that's why I know they're all scams, most of them, because I've learned to build them myself, and I've tested everything, and there's nothing I can make work 100%. It just doesn't happen. It's just not. But there's algo trade. I've done algo trading courses. There's a Russian guy out there. He's really good, and he sells an algo trading course. It's only about $200. And I bought his course because I didn't want to buy his software that he was selling to build algos. I wanted to delve more into the logic of backtesting. This was quite a while ago, and figure out exactly what you need to do to thoroughly test a strategy to make it as robust as you can possibly make it. And that's basically what I needed to get. That was the education that was available, and that's what I wanted. So I did the course, and out of that, I realized after testing hundreds and hundreds of EAs, I couldn't find one. So that £199 was the best education I've paid, because it stopped me buying EAs. And then I bought Strategy Quant, which is a amazing bit of software for automated strategy development. And it's great, and you can build lots of good strategies, and they do work for a period of time. But what I learned from that was that you have to have multiple trend-based strategies, multiple mean reversion-based strategies, and multiple breakout strategies, all running at the same time on the same instrument for any group or portfolio of strategies to become effective. And finding enough of those strategies that don't, over time, start to die because market conditions change is something you have to do pretty much every week. So it's a lot of work, but that's what the algo guys are doing in the banks. Yeah, they're constantly changing their strategies. So, when we're in these conditions at the moment, your trend-based strategies will work great there. Your breakout strategies will work great there. Your mean reversion strategies will work great there. But your mean reversion strategies will all fail there. Your breakout strategies will all fail there, and your mean reversion strategies will all fail there. But your trend-based strategies will all fail there. Your breakout strategies will all fail here, and probably in expanding ranges, your breakouts will work. So, every strategy is going to work at some time, which is why I don't believe you can get an EA that's going to work all the time. You can find an EA setting that will work over a period of time, of course you can, because I can curve fit it to say you should really only be taking shorts there. So if I build an EA that goes short only there, I'm going to make money. It's going to blow it there, isn't it? But me as a trader can identify a market structure as shifting and start going long now. And then I start making money. You teach actually programming an EA to the depth that you really need to be able to read this is virtually impossible. And I've done lots of courses on strategy development, and I haven't really found a solution, to be honest. So this is why I keep, don't get me wrong, I love my EA. It does everything I need it to do. But in its simplest form, it was for a massive back test. And it does work profitably. As I say, it's been running a signal for over 12 months now, and it's more than doubled the account. But I, in my testing, didn't get anything more than sort of 15% drawdown on it. In reality, we had a war breakout and a financial pop, and it did 48% drawdown. But, when I was testing it over a period of a year, it didn't. We didn't have a war breakout. So, I've said this one before, I know, but this isn't really going anywhere. So there's the propulsion gap fill there. So there's that wick test there. We've come back up. We've tested that wick of that candle. So the propulsion gap is filled. So let's see if there's enough sellers now to start driving from here. That IRB there, inventory retracement bar, potentially is a break point, as is that low. Oh, all of us on here, you can trust Andy. Yes, of course I can. I can trust you all, but I'm not going to, I've got nothing to trust you with, have I? That's the thing. It's like news, somebody posts some news in the Telegram group. I need to go and find that news, read that news, trust that news. Like, stuff that comes out is just. There was the Times, yeah. There was one piece of news that came out yesterday, which made me laugh because they always source the news. Yeah, here we go. Look, this one. This is great. Kwarteng departs IMF discussions early as the UK plans a U-turn on tax. Sources familiar with the matter. I'm familiar with the matter. Does that mean I get red news when I tell them about it? Sources familiar with the matter. Who? Everybody's familiar with the matter. You can't turn on the news in the UK without this being the lead story. Everybody in the world in the moment is familiar with what is going on with the UK government and monetary fiscal policy. If they're interested in it, obviously. Sources familiar. I need to know. If you can't tell me who that familiar source is, I'm not interested. It's not real news. I'm just going to move the stop down, reducing risk on this. Just above that wick high. If we put in a new high there, if you look at this on 15-minute, I'm thinking ahead here. Actually, that's a bit higher. That's the 15-minute. I was thinking that these three were making up a 15-minute, but it's not. It's those three. If we break that high, though, I fancy either that or that. What are your thoughts on smart money concept? How do I put this? It happens, but here comes Tinder Hot. I'm not gonna report Tinder Hot this time. They're spamming the chat again. I'm gonna leave them. I want to see how many times they spam. It's only 4 or 5 times, isn't it? There's no point in reporting it because it just never does anything. Smart money concept. It's all just a rehash of something else It all works, but not for the reasons, I don't think, that they're teaching in the way that it's taught. It depends who you're talking about with smart money concepts. ICT claims he came up with it first. He was taught by somebody else that taught him about it. The smart money concepts was, the phrase was coined by somebody else. Steve Malraux, in effect, talks about it in the fact that he uses stop hunts. The guy that invented this indicator, the wide range bar, he was the first one to come up with it. What ICT, for example, calls the fair value gap is actually a wide range bar, and it's been around for 30 years, way before ICT even started trading. So, everything is a rehash of something else. And at the end of the day, it's all market structure, and it's all theory that price moves up and down, in my opinion. We know that. We can see it. How it moves up and down is grabbing liquidity, which is kind of what the smart money concept is based on, isn't it? A lot of it's based on the stop hunt. And like Steve Malraux, his mantra is, I can't remember what his mantra is. Don't trade until they've hit the stops, isn't it? Which, if you think about it, is obvious. Of course it is. It's what we've been doing for years. What is a stop? Support and resistance area. Yeah. So, they call that a stop hunt. I call that a support bounce. Some people call it a double bottom. Call that smart money concepts if you like, but at the end of the day, it's support and resistance. Price moves from A to B. It gets to a point where it's so exhausted that the profit taking has to start, and then it comes back. You look for where it's coming back to. It pushed high from there, so everybody that longed it from there probably put their liquidity under there. It came back down, bounced off of it, caused a load of people to go long there, so they came all their stops out in one go. It's bank manipulation. Whatever name you put on it, all it is the market moving up and down. Every smart money concept tries to teach you a mechanical rule to get in and out of the market, doesn't it? As we know, there are very, very few mechanical systems out there that actually work, because the market is chaotic and random. Yeah, smart money concepts didn't work there at all. Yeah, smart money concepts didn't work there, and they didn't work there, and they didn't work there. Yeah, it's just, in a normal world, in a normal condition, you can set mechanical rules to do things. Everybody was sitting with their smart money concepts waiting for them to hit the stops before they dropped. They didn't hit the stops, they just dropped. Didn't work. Yeah. Support resistance bounce. Didn't work. They didn't do a stop hunt there, did they? So, it's just another name for stuff. But what you need to know is, as far as I'm concerned, price moves up and down through time. Those are the three core concepts you need to understand. And like I keep saying, until you understand that you've got no control over these three core concepts, you won't make it as a trader, because you're looking for that system that gives you that X% strike rate, which doesn't exist. It'll do this, and it'll do that, and it'll do that. I've got no idea which one it's going to do and when it's going to do it, but I know there are certain conditions that are met when certain things tend to happen. I just don't know when they're going to happen. What I teach, my indicator, the main indicator, market reverse alerts indicator, that the EA is based on, that I take all my signals off of when RSI is extended. This is, if you like, smart money concepts, isn't it? I suppose. Break of structure. It's not. It's an indicator that I use, which is drawn on a candle to indicate when there's strength coming back into the market in one direction that I'm interested in. This isn't exactly what anybody teaches, and I don't take it only when a certain condition is met. But market structure is very important. You need to know market structure, because when you get a break in structure, there's a high probability of a continuation at some point, maybe into a fair value gap high, which is not a fair value gap, it's a wide range bar. I don't know if that's a fair value gap, to be honest, because I've never really studied ICT stuff in any detail because it's too long and I just couldn't get my head around it all. Too complicated. My honest short answer to what are my thoughts on smart money concepts: complete overcomplication of something that is very simple. Price moves up and down. Yeah, when it's moved up to a certain amount, you know it's going to come down at some point. Yeah, that's my simplified version of it. So yeah, sorry, one sec. And smart money concept traders never show you their trades, either, do they? There's nobody smart money concept trading on YouTube live, as far as I know. There's a lot of people that will pop signals and they'll sell you smart money concept signals and stuff. But I mean, who's the smart money? There's 10 banks running this thing, yeah? The smart one is the one that makes the money. Yeah. How many of those banks do you think make money? They're all smart. We don't work for the banks. We're never, ever going to be able to follow the banks and what they do 100% because there's too many parties involved in what makes that happen. Yeah. If Barclays are buying, Barclays and HSBC are buying. They're not buying here, but there's a load of hedge funds buying. And then the hedge funds stop buying and some large pension funds take over the buying. The banks are just sitting here. Then the banks start to get out of their positions. Then the hedge funds go, well, the banks are getting out, looks like, so we better get out. And then the pension funds get out. It's that bell curve of first in is always banks because they control price movement. So they will always be early adopters. The ones, I guess, that you would call the smart money traders are the ones that see this happen after a set of conditions have happened and think, right, there's a good chance that that's going to go. And then everybody else jumps on. Then retail jumps on here and gets slaughtered. And then the banks start to get out. And that's the cycle. But it's just too complicated, isn't it? I think. All these rules and regulations and everything. At the end of the day, this is why I use this. If that's up there, get in short. Some point. Don't know when. But if you want to get in at a time that's good, use the reversal indicator because that shows you that there's strength in the direction you're thinking of. I could live with that and that. In fact, I could live with that and nothing else. You know. What is smart money concept? Are we lumping different strategies into SMC? I don't know. What is smart money concept? I don't know. But I class it as ICT stuff and Steve Mauro's stuff. I think they were the guys that kind of really came out with it. But I mean, it's all just a rehash of what they were taught. Both of those guys, don't forget, were taught by other people that came up with these concepts. They're not their concepts. They just produced education on them and gave it a name. You know, simplifying stuff. You know, this is the market reversal alerts indicator. I've given it a name, which is simple. It's a reversal alert. You could call it a W pattern. Sometimes you get a W pattern, sometimes you don't. Sometimes you get a V-shaped pattern. Sometimes you get an accumulation break and it'll give you an alert. It gives you alerts on lots of things, but at the end of the day, it's the market reversing. It's just a name, but I've used a simple name because it simplifies something which is actually really complicated. What's going on under the hood, isn't it? You know, smart money concepts is just a name for it. It's a try, you know, like Steve Mauer's course was called Beat the Market Maker, wasn't it? BTMM. The market maker, you're never going to beat him because he makes the market. And, you know, everybody, this stuff that goes on up and down, you can't beat it. You've just got to get on board and hope that you're at the right time when the market maker is going to do what he wants to do. You know, and the whole risk reward concept. I've got videos out there about risk reward and how important it is. In scalping, it is quite important. In normal everyday trading, you can't use risk reward. If you get in here short with that, and you need a 3-to-1 risk reward to make money, and your target is down there, why would the market go down there? The market's going to come down to where it needs to come down to. There's a load of buyers there that are going to push. There's a load of buyers here that could potentially push. There's a support there where there's got a lot of bank limit orders going to be sitting. Just because you've got 3-to-1 in the market, it's not going to work, is it? That's not smart money. They teach you risk reward, don't they? It's not smart. That's stupid. It's stupid to think it's going to get down to there before it comes up and takes your stop. I don't know. I think the word smart is used as a marketing term to make people think this is better than everything else, and you know, it is. It's better than most stuff out there because it's basically market structure, which is what you've got to do. You've got to have the structure. You've got to know what market structure is to be able to trade it. Yeah. If this thing's going like that, and you're trying to short it, you're going against the trend, aren't you? So market structure just keeps you on the right side of the trend. But you know, and again, smart money concepts, is it mean reversion or is it trend trading? Yeah, there's nothing wrong with shorting it there as a mean reverter against the trend necessarily, is there? Would the smart money concepts tell you to go short there, or would it have told you to go long there? I don't know. Just a name, it's just a strategy. Anyway, I don't know. I don't like anything than what I do, which is why I do what I do. Yeah, that's my take on it anyway. My take on it, there's very, very few traders I have, and we're talking about respect and trust and all that sort of stuff. There's very few traders I have any respect for out there, and those are the ones that show themselves to actually trade. People that produce courses and show you hindsight charts and have never traded live in front of an audience ever before, not interested. And you know some of the big educators that never do that. Yeah, Mr. Greg Secker, ever seen him trade? No. Got a bloody big education business, but you ever seen him trade? No. And there's many others out there, aren't there, as you know. So that's the smart money. Just breaking this low. Going short one more. Well, that filled a nice gap while we were sitting there, didn't it? Waiting for this to actually do something. That would have been my. I wasn't actually watching, but that actually would have been my preferred ad, not here. But I missed it. So I need some follow through here. If we start to show resistance support here at the opening range lows, opening range 2 lows, which is 1.5 hours, I don't think I want to be in it. I want to see us break this properly. Decent selling action coming in. So waiting for this candle to close. Very important, the candle close, especially at support. I want to see us break support and hold it. If we bounce off of this, I think there's a good chance we might just come back into the range. So a lot of people are going to be buying here. Yeah, so there's a load of limit orders sitting here. Again, smart money concepts, yeah. Smart money concepts will be teaching you that regardless of time frame, everybody that went long here is going to have liquidity under there. I guess this is what smart money concept. I don't know. It's like you say, what's smart money concept? But there is a load of orders under here, which are stops, and there's also a load of limit orders sitting here with people wanting to buy the lows, buy the double bottom bounce. See, that's broken above. So yeah, but the reasons it moves is because the algorithms are hunting liquidity so that they can add orders into the market to take it long to push the price back up. They need those sellers. They need the buyers here to get out of their positions, which means they hit a sell button. So the sellers need that liquidity to drive the market down. After they've gone down, yeah, so if you're an algorithm now, you're hunting sell stops. Everybody that's bought the double bottom bounce is going to be stopping out under here. So you're going to push down there to make your money. That's where your profits is being taken. When you get down to there, it's open game, isn't it? Price will probably move back up again. And that is what you call the stop hunt, isn't it, I suppose? Which it is. But I don't know who came up with it. And I think that's what smart money concepts is, but I don't know. Like I say, not what I do. But it's all the same theory. So I suppose it is what I do. So I need to see a nice break of this low now. We should get a decent pop, hopefully, at the bottom. I want to see it pop, though. I want to see some sellers stepping on board when we break this low. Some liquidity run. Don't seem to be getting. I might just take this in a minute. It's a little bit slow today. Just going to move stop to break even in case we just get a fast one of those. I just don't want to get caught on the wrong side of it. If this is going to be a double bottom bounce, I don't want to get caught on the wrong side. So target. If we're coming down, there's a couple. So that spike off the pound US, off of the news about the Liz Truss potential announcement, we've pulled back. A lot of indecision now as to what they want to do. So looking for a break of that low. If we get a break of that low, we should get a nice little flush out again. I really would love to get flushed out down to here by the time the news comes out at 1:30. Then I can make a decision on which way to go. I might break even stop that as well. Now, 60, 35, so it's above those highs. I'm just putting a break even stop on my aggressive drawdown control positions. So that one and that one. Let's break even. So these two can't lose. They can obviously get stopped out, but they can't lose. So we'll get that flush. We're struggling at the lows here. 47 seconds. Oil's coming down. Oh, I'm glad. Yeah, see, I was right. I was right. For once, I was right. Well, we're looking to get back in again. If it comes down too much further. Agreed with Putin to set up Turkey's gas hub. Oh, good one. Red news just about to appear. Turkish President Erdogan, I have agreed with Putin to set up Turkey gas hub. So this is all about rerouting gas supplies basically to give Russia and its allies more, I guess, more control over it. I'm not really getting a flush out of this. We're going to get a pullback in a minute. I think I want to take this. It's very sluggish. It's 10 o'clock, aren't we? There we go. It's payday today. Withdrawing from the funded accounts today. And then I should be back to trading those on Monday. I think I'm just going to close this out. I really can't be bothered to babysit it. And I get the feeling we're going to get a pullback. This is not moving fast enough. We're going to get a pullback, which is going to take me back to break even anyway. So I think I'd rather put the 0.3 in the bank. And 0.4, whatever I get. It's not moving as fast as I was expecting it to. Oh no, it's picking up now. I'll tell you what I'm going to do. I'm going to trail the stops and leave it to run. So if we get a flush, I'll go with the flush. Oh, they're good lines, aren't they? Yeah, so if we get a nice big strong flush out the lows, obviously as you can see the trailing stops just going on, so it's just going to trail down. So I don't have to babysit it. Basically we're just coming into support on the 15-minute here, and then obviously we've got another 15-minute support there. If that breaks, we're probably going to come and look at this level here, I suspect, but that's 150 ADR, so I'm not sure it can get there today, but we'll see. It all depends on what happens with the news. What Indy is that you added to the TSL2 training stop loss? This is the Price Action Toolkit. Price Action Toolkit, which is this, the buttons and the lines. It's in the pinned message on the group if you want to have a look. Basically, all the Price Action Toolkit is what's missing in MetaTrader, which is buttons to perform the simple tasks that you do every day. Buy, sell, move to break even, move your break even average on multiple positions, modify your stops, close your positions out all in one go, and set buy and sell stops in the market for scalping. So it's a scalping tool I built because it doesn't exist in the platform. In the futures, you've got all this in the futures platforms as standard. MT4 obviously is not designed for futures, not designed for scalping, so I built this. And it also has lots of things like this is drawing all this in, which is candlestick patterns basically. That's a long wick. These are inventory retracement bars. That's a strong close candle because it closed within 20% of its ending, like that one there, strong close. That's a bearish engulfing. So for people that want help with candlestick patterns, it draws all the main candlestick patterns in for you as well. Draws in the opening range, high and low, which is the cash open, which you can adjust the timings for indices. And it also will, if you want to, because everybody wanted it to, auto trade for you. But as somebody said the other day, can you stick a time thing on this so that it will only trade between certain times? I said to the person, no, because it's not a set and forget EA. It's designed to automatically get you in on candle patterns when you're not watching. It's not designed for you to go and let it run. But it will auto trade patterns as well if you want it to, but I don't use it. And obviously you can set your stop loss, TP. You can also set your stops and your take profits by pip amount. You can have it set at the last candle high or low, depending which way you're going. And this candle's high and low. So it'll automatically adjust the stop depending on whether you want to use a pip amount or whether you just want to stop above the high or stop above the low, which is good for fast scalpers to get in and out, because you literally make decision by candle by candle. But that's what it is. It's $50 if you want it on the marketplace. There are other buttons. There are other button EAs out there, but most of the ones, the trouble is, I find, again, we're talking about earlier about complication. I find people overcomplicate everything. So I was looking for a button one. I'd much rather just bought one, but every one that I found that had buttons had so many settings. It was so complicated to use, and it was in a, it's lovely. It was, ones that are in a floating window where you can minimize them, you can move it around and stuff, and it's all lovely. But I literally just want to go, this looks bullish, buy. This looks bearish, sell. I just hit my trading stop there. I thought I'd hit a button. I don't like this. Close. This looks like it might be putting back. Break even it. I just want to be able to do, this is what's missing, just buttons. So I just built buttons. That's for me anyway. And things like yesterday here in the DAX, as it's coming down here, I've got like 2 positions on, get down to here, close the most profitable one, move the second one to break even. In here, it's like you've got to find the order, right click on it, close it, or you can use the terminal window obviously down here, and you can go close, you can hit the little button. But if you want to move something to break even, you have to find the trade. You have to like put a stop out, then see, as I did then, missed it, then grab the stop, put it to break even, that sort of stuff. Why you don't have a button that does it? It just seems mental to me that someone like MT4 just didn't think, yes, you can buy it and you can sell it, but what about all the other stuff? And when you're scalping on like 1 minute, 5 minute time frames, things can be moving so fast, especially at the open. You don't have time to do anything. Like I say, I want to go with a sell stop under the low here. Actually, it looks bullish. Cancel it. You should be able to do that, shouldn't you? You can't. I have to right click on the order. First of all, I couldn't put that sell or buy stop in because there is no buy and sell stop button. But even if I want, it could do that. I've got to then right click on it if I can, or I've got to go up to the trade terminal and find the order, which will be all the way down here because it'll be pending order. You've got to do all that. But anyway, you watch. Next release of MT5, they'll put buttons on. Which would be great. I don't use MT5. And they're not updating MT4 because MT4 just works, and don't update it. If it ain't broke, fix it. Which is what they tried to do with MT5. For some reason, they tried to fix something that was absolutely perfect. And they made something which is absolutely monstrous, in my opinion. But anyway, OddCAD. I'm just gonna. That's all. I'm done for the day, basically. Apart from the babysitting. So OddCAD's coming down at the minute. We're just testing again the Asian. Well, it's not the Asian low; it's the Asian midline. But we're testing these lows. We're not going anywhere. I think we will get movement off of retail. So I'm I'm break-even stopping that. As I said, the only reason I've got break-even stops on this position is because it's counter-trend. If it was trend-based, I wouldn't be too worried, but it's counter-trend, so I do not want to get caught the wrong side of that. Yeah, I'm expecting the US dollar to power up, drag the CAD with it, so that I am expecting this to come down. It was just a very nice extended trade with divergence, so it was a good-looking entry, but now it's not looking so good, is it? Got rejection wicks there, so break even on that. The others, Euro Swiss is fine at the minute. Pound Swiss not going anywhere at the moment, and as I say, pound US dollar. Oh, and Aussie New Zealand, which is again stuck, not doing anything at the minute. Nothing's going to do anything until we get retail sales and we get this announcement out of the UK government. So until then, I think we need to just hope that the market starts to retrace some of these moves. Well, I do. And if we can get down to ADR today, yes, I might well take the rest of the month off. Won't really. But. All right, I'm going to leave it there, guys. So keep your eyes peeled on the dashboards. There's a 1 hour alert. Here's Tinder Hots back again. There's a 1 hour alert on the hourly 14. We've just hit the 75 level. The 70 level again. So again, push up, extended at yesterday's high. Looking pretty good up there. Apart from that, there's nothing much else to look at, is there? So, all right. So that's me done for today. If you need anything, come into the Telegram group. Learned a lot today. Thanks. That's good. It's good to have a rambly one every now and again. Even if you disagree with all my opinions, it's always good to listen to people, isn't it? Going on. So yeah, I will make a decision on this. In fact, the decision will probably be made for me this afternoon. But I'm in a fortunate position. Even before that, I still had this month 13% profit. So I will deal with this today, one way or the other. And my decision on the pound US, depending on what happens this afternoon, may be that I'm going to leave it. If we are pushing down and then we're accumulating and then they do an announcement and we don't get very far today, I will probably just leave it as it is. I want to scale out this bottom position and get rid of it, which is going to cost me $121. Dollars. Get which account I'm trading. So yeah, I will get rid of that position, quite possibly. But I'll see how the rest of the day goes. I might scalp something more, and obviously, if these aggressive positions work, I'll be out of it anyway. So. Have a good weekend. Have a good weekend to you, David, and Jane, and Steve, and anybody else. So yeah, I'll be back Monday. I'll be in the Telegram group. If you need anything, be aware, obviously, this afternoon. Don't forget, I'll put an alert in Telegram as I usually do. 1:30 retail sales. We are going to get a bit of movement off of that, I suspect, unless it comes out 100% flat. But I get the feeling we're waiting for something at the minute. And then we've got Michigan, which is rubbish. So we've got Bailey talking tomorrow as well. Hang on a minute. Sorry, what's that? Oh, in Washington. Oh, that's a tricky one. We don't often get over weekend news. With what's happening today, with him pulling support, the market obviously is going to have some kind of reaction to that we're expecting. And if he says something tomorrow that is, like what he said to cause that, there's a very strong chance we'll be gapping somewhere. So take that into consideration if you've got any pound on. If you've got any profit on, regardless of how big or small it is, it might be worth just taking it tonight, just in case. We very rarely get gaps in the FX market now. It doesn't happen, but it happens when there is something fundamental happening over a weekend that is out of our control. The New Zealand earthquake was a prime example. That happened at a weekend, and the New Zealand dollar massively gapped. So there's things like that that can affect gaps. So be careful of that. I didn't read that. I didn't see that down there. So that might make a decision on my pound. Off to walk the dog. Have a great weekend, Andy. See you all next week. I'll be back Monday, same time, 7:50 as usual, and see you in the Telegram group in between. And if you need anything, let me know. Otherwise, have a good weekend, and I'll see you then.